All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and today we have a little bit of a different segment for you. It's kind of an interesting day in the market, so Dylan and I just wanted to hop on here for a few minutes and just talk about some things we observed today and things we kind of found interesting. So, Dylan, I don't know if you want to walk us through what you saw as far as the graphs go today.
Yeah, so today was insane. So we opened up not necessarily low, but we went very, very low on the SPY. We opened up, gapped, what is this, like 6 points lower, and then just shot down. This was not a good time on increased volume too. And if you were me and had a bunch of FUBO, you were contemplating life at one point. So it was bad. So I'll show you on the chart. Some very important things happened going forward. These white lines are supports. Okay. This top right line is this kind of tail end of the hammer here, and then another support that was here. If you'll notice, we gapped down, and then these supports held very well. Not only like very well. I'm going to go to the 5-minute chart real quick. Let me zoom back and then make this bigger. So this is 5-minute chart at about 10:30. Okay, you can see how strong his supports are. This wicked off literally to the decimal, like to the number, wicked off, came again, wicked off, and then we had a giant kind of hammer here, which then pushed everything back up for the remainder of the day. But you can see how impressive and how respected those two lines are. Now I'm going to show you why those lines are important. Because after these two lines, the next support's all the way down here at 407, which is a whole percent lower. And then we are in trouble. Also, this is not a strong support. This is not something I would hold my hat on. After that, we are in trouble. We don't have, because of this whole gap up nonsense, we got nothing right there because we've just been on a tear lately. So if we can continue to hold these supports, we're going to be fine. Today was a very good kind of expression to show how strong those are and how much volume came in to save that. I don't know if, Jay Powell put the printers on or what, but that was very, very impressive. And it's also very telling of what can happen in the future if it approaches this level and loses it, because then we are in like 398 is the next strong one. So
I heard something about the triple Qs hitting like a double top today too, kind of putting a double top pattern. I don't know if you were curious with that.
Yeah. So what they're talking about, I mean, there was a double top earlier, like 342. I don't know if they're talking about that, but let me go. I mean, I wouldn't really say it was a double top because we were constantly increasing the 5-minute chart. We then ran into resistance at 326 and we hit that 3 times. But there is a double top on the actual daily right up here, which does not bode well. But once again, increasing volume, rebounding from this trashy, horrible day is always a good sign.
Yeah. Nice. Yeah. So the thing I actually wanted to talk to you guys about today was, I'm not sure how many people are familiar with Stanley Druckenmiller. He's a pretty common kind of commentator on CNBC, but there's like a backwards like back channel connection personally, but so I always kind of find it interesting. He's a hedge fund guy. He's worth about like $8 to $10 billion, somewhere in that range. Only 8 to 10 billion. He's retired since 2010 and closed down his fund, but he still runs a family office. But
and his last name is Druckenmiller.
Druckenmiller.
Oh, okay.
Almost, yeah. But this quote right here was it really took me by surprise. It's like, well, not by surprise, but it was kind of startling, I would say. I can't find any period in history where monetary and fiscal policy were this out of step with economic circumstances. Was quite scary. He's kind of sounding alarm bells about the Federal Reserve still having their foot on the gas pedal as the economy starts to reopen. And he's worried that we're going to basically inflate the U.S. dollar to the point that we will stop being the reserve currency of the world, which is, definitely has major negative connotations for the United States if that were to happen. It's still many years off, I would think. It's not that's not something that happens overnight. But it's one of the things that the U.S. is fortunate is that we borrow in American dollars, and we're in control of what an American dollar is worth. As you kind of saw, it was back 2009 or so with Greece. It's very difficult for a country that's not doing well financially when they have to borrow currency, funds in another currency that they don't control the value of, i.e. the euro for them. So it's much harder to deal with that. The other thing that I want to talk about is tomorrow is a big day. We're going to get the April Consumer Price Index numbers at 8:30 a.m. before market open. So it'll be interesting to see how that turns out. A lot of people are kind of commented on our channel talking about how the Consumer Price Index is not, really the best measurement of inflation. I was telling Dylan actually that interesting story from my personal life there. I've been shopping for a pellet smoker for a little while, and the one I had my eye on, they sold out recently, and then they announced that when they come back in stock, the price will be 15% higher. So yeah, I was like, great. Probably should have just ordered it.
Bummer.
Yeah, I know, right? But we're definitely seeing it, even if the Consumer Price Index doesn't really reflect that. It's only been up, I think it was like 2.3% for the last measure we had for March. But anecdotally, it seems like we're heating up a little bit more. I'm going to actually do a video, I think, at some point exploring the difference between Consumer Price Index and I think it's I forget the other acronym. It's like PCE. It's another acronym for a inflation measurement. Kind of delve into the history there a little bit.
You're the inflation guy. And,
sure.
I defer to your judgment.
Yeah. Well, there's actually a channel called like Uneducated Economist or something like that.
Perfect.
Check that out. That's probably a little bit better than me. So some guy in his car talking about lumber prices is entertaining.
There you go.
But yeah, thanks for tuning in. Let us know what you guys think of this kind of more ad lib news style segment. We'll see if we make it something that's part of our regular routine.
Yeah, stay safe. Respect those resistance and supports.
Yeah. So, turns out those lines actually matter, huh?
Oh man, was I holding my breath because it dipped below it for it was actually less than like a minute on the minute chart. But
yeah. Gotta love it. All right, thanks for tuning in.